So welcome everyone. Back today. So welcome. We will break down some very critical developments that is happening at the global market at the moment. So that's hence the title, Understanding Global Market Movements, as well as geopolitical, macroeconomic, etc. They are not just headlines, but they are very actively influencing the currency movements as well as any other sort of investment that you may have at the moment. There's a lot of volatility in the market. There's a lot. Yeah, I'm feeling good now, Switz. Thanks for asking. So there's a lot of things happening. There's a lot of things going on. So today we're going to be looking at the current state of the Forex market. So just just looking at the Forex market trends and what's driving currency movements. We're going to do a deep dive into major geopolitical events, of course, including Donald Trump, the tariff delay on automobiles that he implemented. We're going to discuss the role of macroeconomic data, the inflation, GDP, central bank decisions, and etc. Try to understand how traders and investors can sort of think about those and how they're navigating, so we can navigate with them as well. Of course, answer anyone's question. And I think this won't be boring as on Tuesday, because there's a lot of interesting topics that I'm going to try to cover here today. And of course, the impact of the geopolitical risks on Forex market and the importance of macroeconomic data in trading. All right, so first topic, what's the current state of the market? Because look at that, okay? That's the US dollar index. It's literally on the 1 hour time frame. We had this huge up move here of about 1%. And then from the top to the bottom now, we had a 3.28% fall. So that's a pretty interesting thing. So before we go further and discuss the geopolitical risks and the macroeconomic data that is getting released, I want to take a look at what's happening. What's the state of the market, right? We all know that the Forex market is the largest financial market in the whole world. I think it's with over like 7.5 trillion traded daily, and it's decentralized. So we saw this huge move down on the US dollar index. I don't know if you guys have been trading any pairs with US dollar, but let's just have a look at euro dollar, for instance, massively up. Pound dollar, massively up. US dollar CAD, massively down. Okay, that's a big move for USD CAD. Aussie dollar going up like never. Gold as well, starting to rally very close to the $3,000 target that we've been mentioning. And we saw oil, breaching the $67 that I've mentioned, that if we break through that $67, most likely we would continue to fall. And there we are, continuing to fall. US dollar 10 years going up. Well, after go down a little bit of an up move, same for the 2 years. But there's only one thing that haven't moved with the US dollar, and that is USD JPY. So have a look and let's try to compare, okay? So if we have a look on euro dollar, for instance, we saw around 4% up move. On the pound, somewhere around the same, around 2.5%. New Zealand dollar, around 3%. Yeah, 2.5. But US dollar JPY haven't moved anything. If we get from the top, let's say, to where it is now, it's barely 2%. So what's going on? Because if everything else is moving, why isn't USD JPY? Well, the reason is, if we have a look on other pairs like the AUD JPY, CHF JPY, none of them are moving. Because the market is waiting for the next forward guidance of the Bank of Japan. So remember I've mentioned that Japan has been on a negative interest rate policy for a long, long time. And then now they suddenly moved to a positive interest rates policy. And then afterwards, they've increased the rates again and then increased the rates again. So pretty much 3 times consecutive raising the rates. And that, of course, made the Japanese yen much stronger. We can literally see it right here, okay? So October last year, sorry, not October, January this year. I'm just trying to find the pencil. There we go. So January this year, I was trading long USD JPY somewhere around here. I was trying to catch the long leg, but because it broke the stop, but then suddenly it starts to reverse and then break the bottom and then comes for a pullback. And then I started to short it. The reason is very, very simple. I forgot his name, Kuroda, something like that, is the Bank of Japan's prime minister, let's say. It's pretty much like the Jerome Powell from BOG. And he said that he doesn't see any problem in raising the rates. Even if we search that, I don't see any problems on raising the rates. Most likely we're going to have, yeah, there you go. 7th of January, he said exactly the same thing, okay? So that's the guy. We'll likely keep raising interest rates in the coming years as inflation appears on track to sustainably hit its 2% target, say former government Haruko Kuroda, known for launching a decade-long massive stimulus program. So this guy has been saying those things, and then the market starts to pretty much since the 7th, the market continues to go down. So strength for Japanese yen. So since here, strength for Japanese yen and weakness for US dollar. And then we go down, 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 down. And now we're still here because we're still waiting for further forward guidance from the Bank of Japan. Okay. So that's the main reason why the Japanese yen haven't go anywhere at the moment. But as we can see, the other pairs are trading pretty heavily. Now, the next thing is we need to think about what's next, because Donald Trump have just announced sort of a tariff delay, and what does that mean for the market? So let's talk about I would say one of the biggest stories affecting the whole global economy, not only the US, but as like the whole Forex, the whole industry, the whole NASDAQ, S&P, stocks, etc. If we search it up, Trump delays automobile tariffs. So 3 hours ago, let me just find it. There you go. So Trump delays auto tariffs, pickup trucks, might explain why. So on March 5th, US President Trump, 25% tariffs on Canada and Mexico have sent the US auto industry scrambling to plan for the massive tax on some of America's best-selling vehicles, including full-sized pickup trucks, while pinning their hopes on a potential deal in Washington. Hours after the tariffs went into effect, so pretty much for those who don't know, the tariff is already in effect, okay? The 25% tariffs. The White House treated the industry a lifeline, saying many North American-built vehicles would be exempt if they already followed complex rules 2020 US-Mexico-Canada agreements rules for enacting the Trump's first term. And then he said, we are going to give a 1-month exemption on any autos coming through USMCA. So USA, US, Mexico, and Canada. So they are not at disadvantage. White House Press Secretary Caroline Leavitt told reporters on Wednesday. Reciprocal tariffs will still be in effect on April.
Yeah, I put one of the airport for this place.
Okay. So lots of things happening. Let me just a second, guys. Perfect. So a lot of things going on. Okay. And then we saw the whole thing. So he's pretty much announced once again, all the headlines make the market moving. So and of course this decision was pretty much unexpected, and it has caused send shockwaves, like they say, in the financial market. And what were those tariffs about? So during his presidency, Trump took a very strong stance on trade protectionism. For those who don't know, Trump is like, I think everyone can see that, right? Trump is like, America is the best, and like, I don't care about anyone else. I'm here to rebuild this country and literally make America great again. That's not wrong. I mean, I'm not con or pro. I really don't care about what he thinks. But just so you guys see how protectionist he is with America. And then he pretty much was arguing back then that foreign cars and ports would hurt the US auto industry, and that his administration would propose to implement a 25% tariffs on automobiles and auto parts as well, imported from the European Union. So that pretty much would impact a lot of cars, like pretty much German automakers like BMW, Volkswagen, Mercedes, Japan. Sorry, not Japan. Jaguar, if I'm not wrong, is from there as well. So a lot of them would be impacted. And then in Japan, it would be affecting the Toyota, the Honda, the Nissan, South Korea, and other trade partners, like potentially leading to retaliatory measures. So why did Trump delay the tariffs? Well, the decision to postpone those tariffs was pretty much a very strategic and based on several factors. That time, okay, I'm talking about 2022, guys. I'm not talking about now. So back then, I'm just trying to paint the figure. I think that's more clear now, because he already implemented the tariffs. But why wasn't implemented on that time? Why he did postpone it? Well, the first thing was the election year strategy. So the U.S. presidential election approaching, Trump was more likely wanted to avoid economic disruption that could impact his vote base, and then he couldn't get reelected again. The pressure from U.S. automakers, companies like Ford, GM, that's General Motors, Tesla, they've pretty much warned that the tariffs could backfire by raising production costs to them. So it wouldn't be good for them. Okay, so pretty much he's taking a gun and shooting his own foot. Back then, okay? So basically, they tried to avoid a trade war with Europe and Japan. And then the escalation of the tensions, they could have led to retaliatory tariffs. And that would affect the US exports, like the agriculture as well as the technology. Then we go to, of course, the financial market stability. So stock markets were really volatile at that time, and a very aggressive tariff move could have triggered a major sell-off. And the market reacted like really, really the same time as reacting now. Euro-dollar saw a temporary rebound because the fears on Euro and US trade war diminished. And then the Japanese yen sort of stayed flat because the risk of economic disruption in Japan decreased. And then the US stock market stabilized, but this time was a little bit different because the US stock market was actually up. So yesterday, 3 p.m., the the USA market on the stock markets was going up. So the decisions are a bit different now. And what makes that different? So Trump is implementing not only 25% tariffs now on automobiles, he's actually changing his argument. He's implementing tariffs on countries, and he's not implementing tariffs on automobiles anymore. So what's going on? Well, think about it. It's much easier for them to implement tariffs on a country than something that brings revenue to the country. That is the car, the auto industry, right? So implementing tariffs on Canada, Mexico, and in China is much more, not safer, but it's much more safer. That's not the word I want to use. It's much more easier for them and safer in a sense than implementing 25% tariffs on any piece for a car that comes out of Mexico and Canada. Because what would happen is, for those who don't know, there are massive trucks on US, okay? USA trucks. Have a look at this. So there's a lot of trucks on the streets, okay? And people love those SUVs sort of car. But I mean, it doesn't really make any sense for you to put 25% tariffs on top of those assets, because this is an asset for a truck driver, okay? This is very expensive. It's not cheap, my friend. It's millions. Sometimes it can cost $1 million for those trucks. Okay. So when sometimes this little letter comes from Canada, this little glass comes from Mexico, these wheels come from China, the bolts come from China, the engine, it's made on US. This part here, it's a container made on US. So sorry, on China. So he pretty much would be getting a gun and shooting himself on the foot or his knees. Because what would happen is the trucks would go up in price, because every time, okay, so that's another point that people are not understanding. So let's say here it's US, okay? Here is China. Actually, let me make it better. Where is my drawing tool? So here is US, here is Canada, here is Mexico, and then we have China, okay? So think about it. Every time someone wants to literally purchase a car, Canada, US, Mexico, and China. So every time someone wants to buy a car on US, what they would have to do is they go to the dealership and then they buy the car. Perfect. Awesome. Now, if the car is made some parts from China, some parts from Mexico, some parts from Canada, he would be pretty much 25% tariff, 25% tariff, 25% tariff, sorry, 10% tariffs here, and then 25% tariffs here, and then 25% tariffs here. By the end, that piece is costing more than 60%. So if it used to cost $100, now it's costing $160. Who is going to pay for this $60? Is the producer? Absolutely not. The producer will pass to the end consumer. Okay? So that's what he was going to do. And then he was like, oh my God, no, that can't happen. So let me take off the tariffs that are on automobile pieces and cars. So that's fine. Now everyone trades safe. And there's no problem between them, okay? So you guys understand. That's exactly what is going on at the moment. Now, coming back here. Sorry. Okay, perfect. So coming back is pretty much what happened today. And the next thing that happened as well, that is fulfilling the strength of the euro that we can see, is the end of the war on Ukraine and Russia. End of war, Russia and Ukraine. Just check. So 3 days ago, that's the first part I want to show. So 3 days ago, Zelensky said, Zelensky says, end of war with Russia is very, very far away. So showing that he doesn't want to stop the war, okay? And that he will continue to do that if needed. But then Putin is like, oh, mate, I really don't want to do this anymore. I just want to stop that. We've been killing so many people. Can't we just come to an agreement and then we can stop that? Well, Zelensky says very, very far away. What happens next is the best. So Zelensky say that he wants to end the war. So that was 3 days ago, remember? There's a mosquito. So 3 days ago. And then 2 days ago, he says that he will work under Trump's leadership as he proposes Ukraine peace plan. Voila. What a good one, huh? What a good man. What happens with the euro? Well, when Zelensky told that he's not stopping the war, that what happened. Okay, so we had this move down. When Zelensky said that he's stopping the war, we had the move up as well. Because if the war stops, then Germany gets better gas supply because Russia is supplying gas to Europe. And at the moment, they're not doing that, okay? So when the war stops, that's what's going to happen. Germany will get a better rate for the gas. That's pretty good for the economy, isn't it? Because people won't have to be spending more and they won't be generating more inflation. Well, that's exactly it. So we saw this huge move up based on those two factors. Okay, so Trump and Zelensky. Now, we all know that geopolitical risks are pretty much one of the most important factors affecting the Forex market. And unlike economic data, which follows a very sort of predictable schedule, the geopolitical events are unexpected and they create much more volatility. So the US and China trade tension is something that we have to be paying attention. Any escalation in the trade disputes will affect the whole currency market. But if we have a look at USD MXN, we saw a huge up move and a down move. That's because of the delayed proposed automobile tax. Same goes for the Chinese one. Same goes here, okay? I know it's a bit of a not so cool chart, but yeah, up move and down move. So these things are moving the market, and these are the things that you should be paying attention. Next thing is the Middle East conflict. So raising tensions impact on the oil prices. We all know that Trump has three main things. All right, he wants to do three main things. Let me write it down for you guys. So the first thing is this. Oopsie. First thing is tariffs. Okay. The second topic he's paying a lot of attention is tax. Okay. The third topic he's paying attention, is business development. And the fourth is BTC reserve. Okay. That's the topics he's paying attention. Tariffs, tax, business development, and Bitcoin USA reserve. First thing is done. What comes next? Taxation. Okay. First thing is sort of done. Okay. So 25% tariffs. Canada, Mexico, and China. China is only 10%. I'm not too sure why he did 10%. Maybe there are sort of a reason behind, but I didn't search for that. And then the next point is the tax. Okay, so taxes would be the next. I'm not too sure what he wants to do because it's very hard to be getting information from the White House, but we have to be paying attention. Anyways, sorry. Forgot to mention about the oil prices as well. So Trump has a huge role on oil prices, okay, because of Canada. And Canada knows that. And what I'm afraid of, and what I've mentioned already, maybe 2-3 weeks ago, is a trade war. It's exactly what sort of happened before. Remember when I told 2018, 2022, when I've mentioned it about Trump imposing tariffs on the auto trucks and etc.? Well, that can possibly continue to happen because he's doing the tariffs. It's something that he always had in mind. He always talked about that. And then what if China sort of gives back 25% tariffs as well? What if Canada increases the sale of oil for US? What if Mexico just don't want to, well, Mexico needs a lot of help from US, but what about if Mexico don't help the USA anymore? So lots of things in my mind, and I think we should be paying attention on that. Definitely, a lot of attention. Okay, so any headline would be key. So we've talked about, we talked about the current state of the market. We've talked about the Donald Trump tariff delay and what it means for the market. Sort of talked about the geopolitical risks. And now what's the importance of the data that is coming? So let's have a look at the data coming from the market. For that, we're going to be using FinLogix. And so come here into tools, and then we go into economic calendar. Then we go this week. So Tuesday, we had the Japan consumer confidence, 35 against 35.7. Today, we had 0.6% growth on Australia. So that's the reason as well. The Australian dollar is sort of getting his foot up. There you go. Second point is the China National People Congress. Sorry, that was yesterday. Today, United States, let me just put the medium as well. So today, we had the ISM Services PMI as well as the Global Services PMI. So all of them came in much higher than expected. And that's why I always, that's another good example why I always say to be proactive, have some look at the headlines and make sure that you are up to date. Because yes, look at the good data we had. We had such good data, right? But then look at the US dollar index. It's literally falling. So it's not always like that. Okay, so you have the FX market, and then on top of that, you have two big circles, right? You got the macroeconomic data and you got the geopolitical effect. The first one, if it happens, will affect is the geopolitical, and then afterwards the macro. Okay, so always pay attention, especially on Trump administration. Definitely pay attention on that. Anyways, Australia building permits and Australia balance of trades, not much. And we have retail sales. And then tomorrow, Friday for me, midnight 15, we have the ECB interest rates decision. Well, let's just pause here for a second and try to understand what's going to happen. It's widely expected already that, let me just get my account signing. There you go. Come to, there we go, interest rates probability. Let's have a look at the interest rates probability for Europe. Perfecto. Now, 98% of the market is expecting to be a 25 basis points cut today or tomorrow. What's today? Today's the 6th. Oh, yeah, because that's not in Australia time. Like, what? But yeah, tomorrow for me. So 25% basis points cut, and the current rate is at 275. So expected to be 250, and the probability is 98%. Listen, this is not 100% tool, okay? This is just working on sentiment. It's a private tool that we use, but everything can change. But I completely believe on a 25 basis points cut, as the consensus believes as well on a 25 basis points cut, okay? 265. 290. Well, they're expecting 20, actually, not 25. But I'm expecting 25. There's no reason to do increments of 20. So, but that's interesting. So that's interesting. So if expected to cut at 2.5, so if we are on 2.9 and we cut 20, we go to 2.7. Interesting. So there's something wrong here. Yeah, so that's interesting. This is wrong. 2.5, not supposed to be 2.5. Or either this one is wrong. Oh, sorry, the positive facility rate, guys. I'm looking at the wrong one. But yeah, so that's correct. So yeah, expected to do a 25 basis points cut. And then what's going to be most important is not the cut, because remember, 98% of the market is already expecting that. What's going to be important is what they will say, what they will state. Because remember, things are getting well for Europe. Now, if they say something bad, then the market will be like, I don't want to go anywhere. I just want to put my money into treasury. Okay, that is much more safer for me. And that's exactly what the market will do. And then if the market does that, euro dollar goes down. So paying attention onto the ECB rhetoric tonight will be key. Okay. Do I think it can possibly come back? Well, look, most likely, but not maybe today. I think today we may continue to have a rise into euro dollar. Okay. Next, we got Lagarde's speech, but we got as well something else that I'm trying to find. There you go. NFP. So tomorrow is the NFP day. And we have, as always, always say that we have the NFP, the actual non-farm payroll, we have the unemployment rate, and the average hourly earnings. Okay, those are the things we need to be up to date. We need to be looking. It's not only the NFP, it's not only the average hourly rate, it's not only the unemployment rate. It's a combination of those three. It doesn't matter if the employment grows and then people are getting paid less, and that doesn't change anything. What they're expecting is a no change on unemployment rate, so still at 4%. The United States average hourly earnings expected to decrease 0.2% month over month, and the year-over-year is expected to maintain the same. And the non-farm payroll is expected to be at 160K. Previously was 143K. So lots of things to digest here. So first of all is the unemployment rate. Unemployment rate, if it falls below 4%, it will be really positive for the US dollar, because the Federal Reserve was expecting between 4 to 4.2. Okay, So if something goes much better than what they were expecting, this is really good, right? Well, that's exactly it. So this would be much relief for the US dollar. Next point is the average hourly earnings. 0.3% month over month is okay because there is a lot of volatility in these data points. What is most important is that, the year over year, so 4.1% year over year. That was expected to be 4.2, 4.14. So anything between those numbers will be okay. And then the non-farm payroll, 160K, I think it's pretty plausible, I would suggest. In overall, I see a sort of mixed data points on US, okay? We'll sort of drag the US dollar up and then drag down and then sideways, or drag down, drag up, sideways. Not looking to trade this NFP this week. Just too many things happening. We don't know. Going to be the third NFP from Trump administration, so I'm just trying to get used to it, as if I can say that. All right. So that's pretty much it from today. USD-CHF. USD-CHF, I think, as I say, the US dollar is very weak, and CHF is a safe haven currency. So shorting USD-CHF wouldn't be a bad idea. Euro-Aussie. Euro is very strong, and Australian dollar is very strong as well, as we could see. In my opinion, just looking at the chart, I would be out. I wouldn't be trading that. And we're nearly on this high, August 24th. So looking to stay aside of that. Just because the risk reward on that wouldn't make any sense. What I'm looking to is, the crypto summit would be really interesting, Matthias. I'm not a big crypto guy, just so you guys know. I don't understand much about Bitcoin and those types of things, but let me just get it, this one here, so I can share my, perfect. So with Bitcoin, we had this up move since yesterday, and that pretty much is the S&P 500 move as well. Okay, so we had this move up, and then we have this move up. So all of those things are sort of making me believe that there is a strong correlation with Bitcoin and any other USA sort of stock related thing. Okay, so I'm strongly believing on that. So short-term volatility is related to stocks into US. The sort of medium-term volatility is, will Trump make Bitcoin the reserve, the USA reserve, in the first 100 days of a mandate? Well, if we look to Polygon, there you go. There's a 24% chance right now of Trump make Bitcoin a reserve in the first 100 days. And that has a lot to do, because if we look here, the Bitcoin dropped exactly the same times as on the peak of those drops, and now it's going up. So it's pretty much the same chart, down and then up. It's exactly what we can see here, down and then up. And that is more on the long term. So shaping the market at the moment is the USA crypto market, stock market. And then on the long term end, we can see, like, will Trump make the Bitcoin a reserve in the first 100 days? Okay, that's my opinion. But yeah, and then gold up as well with all of this geopolitical and macro things happening, gold up to 3,000. All right, guys. So we've pretty much covered everything, the current state of the Forex market. Donald Trump tariffs delay, the impact of the geopolitical, and the importance of the macro. I hope you guys liked it. I'll see you next week on Tuesday, and have all a great weekend ahead, and I'll chat to you soon. See you guys. Thank you. Bye-bye.